So we have to talk about Tesla stock again, actually being down almost 6% however, from the recent highs again. But this also means that the recent pullbacks from the astonishing gains of more than 2,000% last year are continuing, currently leaving us at under $650 again. So what we are going to do today is give you an insight into what is actually happening to Tesla's stock and break down exactly whether it is still a buy at the end. And as the analysis in the video is as always crucial to consider before buying the stock, make sure to stay tuned. Really quick before we start, just hit that subscribe button down below. And as we'll keep you updated on breaking news and awesome trading opportunities every single day, subscribing would not only help us but also you. So there is really no excuse for not smashing the subscribe button, it's free, and you can always unsubscribe if you feel so. Alright, let's start talking about the stock, and in the case of Tesla, we mainly need to consider two critical factors. On the one hand, we are looking at one of the best and largest electric vehicle manufacturers in the world, with promising solar and energy storage potential. But what is important to bear in mind, especially in 2022, is that there will be a lot of new competitors in the electric car industry. We also need to discuss the enormous prospects it sees in China right now, as well as certain key company fundamentals and the recent drop of the literally fastest accelerating car ever built for the public. So, first and foremost, there will be a lot of competition in the future, with virtually every traditional automaker migrating to an EV-heavy lineup. But while there are obviously dangers for Tesla, especially given the current problems for manufacturers as they battle supply chain interruptions caused by the pandemic and the threat of increasing inflation, recent figures indicate that Tesla is unlikely to fall apart anytime soon. So although no company's stock can go up forever in a straight line, the long-term uptrend in shares, along with a few objectively excellent numbers Tesla recently pulled, definitely explains why investors' excitement is rising once more. Having a look at some key numbers, current market capitalization is over $600 billion, which is greater than all of its top competitors put together. And due to its inclusion in the S&P 500 index in December, it's now among this leading index's top 10 largest stocks. But considering their enormous facilities and cash on hand, some competitors can have a substantial edge outside of market capitalization however. But if there's one thing that Tesla can do right, then it's proving the world the enormous potential of their vehicles. And by now delivering the literally fastest accelerating car in the world, faster for example, than every Porsche or other sports car, it did exactly that, while also outclassing every competition. Tesla also announced first quarter metrics in late April, with revenue sitting at almost $11 billion and net income of more than $438 million. And in addition to that, the company also produced and delivered the most vehicles ever in its history, according to Tesla's management. So despite a number of hurdles, including seasonality, supply chain instability, and the transition to the new Model S and Model X, Tesla was able to achieve this. During the last year, the automaker has actually increased its manufacturing capacity as well, aided in part by the new factory in Shanghai, China, which is also critical for our prediction later on. Tesla produced 206,421 cars and delivered 201,250, according to its second quarter report on vehicle production and deliveries. These figures are compelling enough to warrant a stock's current high valuation. Furthermore, over the next several years, Tesla intends to increase deliveries by over 50% each year. And a crucial part of the company's near-term expansion goals will be the opening of its production facilities in Berlin and Texas, which are expected to do so in late 2021 or early 2022, as well as the introduction of its new pickup vehicle, the Cybertruck, and the already mentioned Model S Plaid. So as the stock is still relatively cheap and not at its recent highs again, it would make sense to buy some more shares right now. It is more than likely that the long-term rally continues and prices will go up again. Alright, with that being it for today's video, thank you very much for watching. If you like this video and want to support our mission of providing free financial information to everyone here on YouTube, please ensure you're subscribed and definitely consider leaving a like. As mentioned before, it really means the world to us. Thanks a lot and see you next time.